Welcome back. Oil prices this morning are pulling back. Take a look at crude below 93 now, down 0.5% at 92.61. Investors are waiting on greater prospects of a potential deal with Iran following a ceasefire between Israel and Lebanon. President Trump reportedly also told White House staffers that the only way that he would resume a full-scale war with Tehran is if any U.S. service member was killed during any operation. Joining me now is American Petroleum Institute CEO Mike Sommers. Mike, great to have you this morning. Thanks so much for being here. What is your assessment of the current supply-demand situation with regard to the price of oil?
We're at the point, Maria, where we should start getting concerned about shortages in the United States because of the fact that we are reaching a level of inventories that we have not seen in many, many years. We're draining the SPR at about 8 million barrels a week. Diesel inventories are at record lows. Since March, we've drained about 38 million barrels of gasoline from our inventories. That's the equivalent of the full summer driving season. So we're starting to get concerned about where inventories are. Fortunately, American producers are stepping up. You're starting to see rig counts go up in response to this supply crisis. So at this point, we need to produce more. And fortunately, President Trump's policies have really pushed producers to produce more here in the United States. And we see evidence of that every single day.
Yeah, and I mean, when you even look at this on a global scale, Mike, you've got the UAE leaving OPEC. They don't have to follow those quotas anymore of OPEC. That's going to probably mean more oil on the market. But the Boston Federal Reserve out with this report that finds America's increased domestic production significantly reduced the impact of a global energy price shock on inflation and unemployment. It shows a boost to the PCE index by 1.5% over the next year, less than the 2.2% increase seen in the 1970s, Mike. So, I mean, they're basically reporting that you've got oil on the market, and that will stabilize any shock that one would expect.
Well, it turns out we were right, that if you produce more here in the United States, that provides energy security for the American people. And because we're now producing more than 13.5 million barrels of oil a day, that has provided a buffer for American consumers during this time of crisis. But it can't last forever, which is why we're sounding the alarm on these inventories going to record lows. We need to be very concerned about that, particularly on the East Coast and the West Coast. On the West Coast, you're already seeing it. You see near $6 gasoline on the West Coast. Fortunately, President Trump put into place Jones Act waivers so we can actually move product from the Gulf Coast to the West Coast. The same is going to be true on the East Coast as well. We should be concerned about what prices we're going to see over the course of the next few weeks. We have to solve this problem in the Strait of Hormuz. Fortunately, American production has been a buffer for American consumers.
Well, what you said earlier is true in terms of the National Strategic Reserve, and those numbers are lower. I mean, let's talk about the SPR because it's on pace right now to hit the lowest level in decades. This month, we're at 357 million barrels. That's about roughly half the total authorized storage capacity. 8 million barrels were withdrawn from the reserve last week, hitting levels reached under the Biden administration, which, of course, were previously seen in August of 1983, Mike. So, you know, you've got executives recognizing that we are looking at petroleum reserves going lower, and warning is just what you just said. You know, that prices will get impacted if, in fact, we don't have the kind of stockpiles that we need to meet the growing demand.
That is the big concern. When you're draining at this kind of level, at 8 million barrels a week, at some point you hit a point where you're going to see an impact on prices. And remember, we can't drain the reserve all the way to the bottom. You still need about 20% slack in the system or the system starts breaking down. So you're at the point where you're draining commercial inventories, you're draining our strategic petroleum reserve. Inventories are going down all over the world. The United States is the producer of choice right now, but it just can't last forever. We need to get the Strait open, and we need to get it open as quickly as possible. But in the long term, Maria, we need to start thinking about what the American production is going to do to help bolster the situation we're in. We need policies to ensure that we're never in this situation again. And we want to advance those policies with Congress and the administration. The Trump administration is off to a great start, but there's more to do.
Yeah. So what do you want to see in terms of the reserves right now? I mean, you don't want the U.S. to be buying oil at these levels, do you? To put it in the reserve?
Oh, absolutely not. Absolutely not. But we need more production. And fortunately, that's starting to happen. You're starting to see it in Alaska, where we've seen record lease sales. There was a record lease sale in New Mexico just a couple of weeks ago, a $4 billion lease sale. That's 4 times higher than the most recent highest level record lease sale. So you're starting to see more action here. But we also need to work with our allies in Mexico and Canada and throughout the Western Hemisphere to produce more in the Western Hemisphere so we don't have to be so dependent on these products coming out of the Strait of Hormuz. So there's a lot more we can do. We can modernize the SPR so that we can put more in it. These are long-term solutions. But right now, the only real solution is we need to get the Strait open as quickly as possible, or consumers are going to start feeling it at the pump.
Yeah, I understand. And in terms of, Mike, your assessment of oil, I mean, the president has said repeatedly that at some point, once we get out of this conflict, oil and gas will be tumbling down. How long do you believe this unravels, this move above $90 a barrel? What does the rest of the year look like in terms of pricing from your standpoint?
Well, it just depends on how quickly we can get the Strait open. It will take, 6 months to a year to clear the backlog in the Strait. And in addition to that, you have significant production that has gone offline because of the conflict in the Middle East. And that's going to take a while to get back online as well. So I think we're in a position where you're going to be dealing with elevated prices for a while. But the president's right. Once there is a resolution in the Strait, you should expect some relief in oil prices.
All right, we will leave it there and keep watching. Great to see you, Mike. Thanks very much. Mike Sommers joining us this morning.
Thanks, Maria.
All right, we'll see you soon. We'll take a break and come right back. Take a look. You're watching Mornings with Maria live on Fox Business. Stay with us.